Hey everyone, welcome back to Corporate Decoder. Today we're diving into the wild world of Faraday Future, that electric car company that's had more ups and downs than a poorly designed roller coaster. This time around it involves a familiar face taking the wheel again, so let's see if they're finally driving towards a brighter future or just spinning their tires. Today we're looking at an 8K filing, which is basically a quick update a company sends to the SEC about big news. In this case, it's all about a change at the top. The big news is that Faraday Future has a new co-CEO, or actually a returning one. Yuiting Jia, the founder of the company, is back in a leadership role. He will be sharing the CEO responsibilities with Matthias Eid-Teed. Think of it like having two captains on the same ship. Hopefully they are steering it in the same direction. Jia will be in charge of things like the user experience, supply chain, research and development, finance, legal matters, and their business in China and the Middle East. Eid will handle the vehicle engineering, manufacturing, and quality control. Guowei Wang will keep overseeing business stuff, company strategy, HR, and risk, and report to both co-CEOs. Sounds like a complicated management structure. Before becoming co-CEO again, Jia was the Chief Product and User Ecosystem Officer since 2019, and before that he was actually the CEO from 2017 to 2019. He's got a long history with the company, for better or for worse. He also founded other companies like Li Holdings and Li TV, so he's definitely an experienced entrepreneur. Let's talk money. Jia will get a base salary of $680,000 a year, which will jump to $900,000 once they hit a certain production milestone for their FX Super 1 car, what they call SOD Phase 1. He's also eligible for a performance bonus, up to $81,16,000 before that milestone, and $1,080,000 after. But the real kicker is the potential equity awards, which could be worth a lot if the company's stock does well. Here's how the equity awards work. There are two phases. In phase 1, for every $5 increase in the stock price or every $700 million increase in the company's market value, Jia gets restricted stock units or RSUs equal to 5% of the company's outstanding shares. This goes on until he gets RSUs equal to 5% of the company's outstanding shares. This goes on until he gets RSUs equal to 5% of the company's outstanding shares. This goes on until he gets RSUs equal to 5% of the company's outstanding shares. This goes on until he gets RSUs equal to 5% of the company's shares. In phase 2, after he hits that 5% cap, for every $20 increase in the stock price or every $3 billion increase in market value, he gets another 1% in RSUs, up to a total of 9% of the company's shares. That's a huge incentive for him to boost the stock price. These milestones need to be sustained for at least 15 days before he gets the RSUs. He's also still entitled to those stock awards that they announced last September. And there's more. Jia $2 million signing bonus, but he has to stay with the company for at least 4 years, or he has to pay back part of it. A third of the bonus will be paid after they file their report for the quarter ended in March, another third in May, and the final third after they file their report for the quarter ended in March, another third in May, and the final third after they file their report for the quarter ended in March, another third in May, and the final third after they file their report for the quarter ended in March, another third in May, and the final third after they file their report for the quarter ended in March, another third in May, and the final third after they file their report for the quarter ended in March, another third in May, and the final third after they file their report for the quarter ended in March, another third in May, and the final third after they file their report for the quarter ending in June. The company also put out a press release about this, which is pretty standard when there's a big announcement like this. Now let's step back and look at the bigger picture. Putting Jia back in charge is a bold move. It could revitalize the company given his history and vision. On the other hand, it might bring back some of the issues they had when he was previously CEO. The compensation package is heavily incentivized towards stock performance, which can be a good thing, but also could lead to short-term thinking. They really need to deliver on their production goals and show that they can actually sell cars. Faraday Future is still a risky investment. They're in a competitive market, they've had financial troubles in the past, and their management structure seems a bit complicated. It's hard to say if this move will be a success, but it's definitely something to watch. Thanks for watching. If you enjoyed, please subscribe, like and comment.